Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, January the 8th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, economic data across the pond, not so much really there, but we did get German factory orders coming in at a drawdown or a negative 1%, expected to be a negative 0.2%. Remember, we kind of saw that coming in a couple of, industrial production came in with we saw yesterday factory orders coming in from Germany at a negative 1%. That brings us over to today. We're getting industrial production coming in at a negative 1.9%. So we got a little bit of a precursor yesterday, knowing that this was coming out, that they were really starting to show some of this manufacturing pullback. Whether or not it is for a slowing economy or just coming out of the Christmas holiday or the holiday season is something to be determined. Fact that it is coming in much lower than expected, almost by 2 percentage points, is not a very good sign in my eyes. But we did get French trade came in at a negative $5.1 billion, expected to be 4.9. And then here in the United States, we got the National Federation of Independent Businesses. It's a small business index, basically a survey of these small businesses, asking the owners what their outlook for the economy is. It came in at 104.4, expected to be 103.1, so better than expected there. That's good. These small businesses are really the driver of the economies, as that creates this velocity of money that we see that I've talked so much about. And then JOLTS jobs opening comes out a little bit later on today. That is going to be a little bit of a precursor to Friday's unemployment number. I wouldn't put a whole lot of credence into that number, though. So we do have several unemployment numbers coming out before that. But the real one to look at is non-farm payrolls on Friday. All right, that's about it for the economic data. Let's get over here to the equities and the rest of the broader markets. We've got crude oil right now moving up by about 75 cents, looking to test that $50 a barrel mark that I've been talking about. I think we're going to migrate back into the 50s relatively soon. I was thinking it was going to be this week. Just hoping that this isn't a bit of a resistance area right here, which it very well could be, as it has acted as support. I thought about drawing a line in there, which I may very well do, because I think that is that $50 a barrel mark, let's call it, is going to act as resistance, whether it's just a psychological level for the most part. Those levels do come into fruition, so it is a solid area. So we're going to say the $50 a barrel mark is going to act as overhead resistance right now, which I believe we're going to peel through that and start moving higher. Gold futures coming off again. They are just a product of the levers and pulleys of the market right now. We've had the equities up earlier this morning. They were starting to come off, and that's going to cause downward pressure in gold as people pull out of gold and push it into the equities. So without further ado, let's go over there and check out equities and what's going on. Actually, let's talk about the bonds. They're really unchanged. They haven't done anything. They're just waiting to see what the equities do. VIX starting to move a little bit higher. We were coming off in the VIX earlier today as the market opened up. The Dow Jones opened up triple digits higher, I think like 200 plus points higher, and then has since started coming off a little bit. But you can see we're still up almost 200 points, rallied probably up almost 300 points. This is that type of setup I've been talking about that I don't really want to see, where it makes it look like a dead cat bounce. This was a fake out dead cat bounce where we got that roll over to here. But we've gotten through this Fibonacci. We're still trying to peel through these value area lows, which are going to act as overhead resistance. And, a chart setup like this would really look like we're going to start resuming to the downside. I'm playing everything on the porch anyway. I'm just keeping an eye out. We only have 10 days left in this January contract, and then we're into February, which is right in the basic heart of earnings season. So I want to stay away from that. And 11 days to go, there's just not a whole lot of premium to be had, especially with the types of moves we've been getting. And that the gamma trade is really starting to pick up in and around these markets. So that affects the style of trading I like to do. Having said that, I'm on the sidelines right now, waiting for confirmation tomorrow, probably before I really add anything. Again, similar setup here in the NASDAQ. We are positive on the day by about 20 plus points. But again, we've gotten through this overhead resistance, which is a major milestone. As long as we settle above this 38 Fibonacci retracement, I think that we're going to be okay. A settlement below that, it's going to look really bearish. And a settlement like at the end of the day where we get that settlement late day sell-off and a settlement towards the low end of the range is not going to look very good either. Then on to the mini S&Ps, same chart. I mean, I could just change the name up here. The charts all look the same right now. E-mini S&Ps aren't really seeing that type of resistance, but they're going to feel that with Dow having some overhead resistance, NASDAQ having some overhead resistance. This isn't going to right now run up to its overhead resistance because it's already broken through some layers, all right? It's going to still feel the levers and pulleys of the market as the Dow starts peeling back on the NASDAQ. It's going to cause downward pressure on the E-mini S&Ps. It doesn't always mean that they go into negative territory, but they do have a tendency to pull back and pull and push at the same levels. All right, E-mini S&Ps on a daily chart, 30-minute candles. Each blue section is a day. You can see that overnight inventory started getting long, and lo and behold, what happens when we start getting economic data out? That wasn't the greatest economic data as we were seeing. Factory orders out of Germany and that. What else? The National Federation of Independent Home Buildings should have been pretty good, but that I think overseas economic data is really causing some anguish, if you will, because we don't want to see a global slowdown over there, and then because that will cause us to start to slow down. And because I haven't added any trades or done anything like that, done any adjustments, I am very close to pulling the trigger on my Starbucks. It's very close to 50% of max profit on that. And if you remember, I did that on the same day I did like the Facebook and stuff, but I'm short the 65 calls in there, and it is very close to 50% of max profit. If I'm going to be keeping an eye on that one today to look to cover. The other one, GDX, isn't really close to that 50% max profit, but Starbucks is. And those are the really only two trades that I have in my portfolio right now. So I am looking daily. I grinded yesterday trying to find something, but with all these earnings coming up, it was very difficult to find anything good. And the fact that I don't believe that we've gotten a real confirmation as to whether or not this market is found that bottom, or if we are still looking at a dead cat bounce here. So I don't want to get too aggressive right now, especially ahead of earnings with this market directionality. So I'm kind of just playing it on the sidelines right now. I'm keeping my eyes out for opportunities, but I haven't seen anything right now. So if you see anything, tweet me. Tweet me at Wolfman's Blog. You can follow me on Twitter at Wolfman's Blog, or Pro Trader Strategies at Pro Trader Strat. That's all I've got for you guys today. Hope everybody has a great trading day. And if you can't take that, take it easy.